The markets are starting about 0.5% lower.
Currently, the Nifty is down 27 points. Nifty is down 66 points.
Very sharp 30, 40, 60-point moves, compressed moves coming in just like that. I mean, in a few minutes, and then they disappear. The market is ending almost unchanged as if, compared to yesterday's close. 1 point change.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar, and these are the headlines for the day. Last hour recovery on Dalal Street. The Nifty ends flat. The sensex gains 0.25%. FMCG private banks bat for the bulls. Adani Group stocks remain a major drag. Adani Group stocks tank, lose nearly 9 lakh rupees in market capitalization in 1 week. The Reserve Bank seeks information from banks on their exposure to the Adani Group. FMCG stocks lead the markets higher. Britannia soars 4% on a strong Q3. ITC, the top Nifty gainer ahead of Q3 earnings. Ashok Leyland gains after posting strong results in monthly sales, but a weak offtake hurts Hero Motor even as Eicher Motors skids despite a strong showing. Metal prices continue to hit fresh highs, but stocks fall on profit booking. After the recent run-up, the Nifty Metal Index tanks over 4%, GSPL down 6%, Tata Steel sees a cut of nearly 2%. And here's a lineup of what we have for you in store today on Markets Today. We get you market opinion from Samir Arora, Helios Capital, and Sridhar Shivaram of Enam Holdings. And the big corporate voice on the show today is the Adani Group Chairman Gautam Adani on the withdrawal of their mega FPO. The first up markets, the Dalal Street recovered in the last hour of trade, led higher by private banks, FMCG stocks. The Nifty ends flat with a slight negative bias, but the Sensex gained about 0.25%. The Nifty Bank and the mid-caps also fared well. However, the Adani Group stocks continue to be a major drag on the markets. Prashant is here standing by with the day's trading action. Prashant.
Absolutely flat close for the Nifty and a positive close for the Bank Nifty. The Bank Nifty actually doing much better than the Nifty. The index ending about 0.5% higher. And this is a good outcome. Yesterday, things did recover quite a bit. And I think slowly but steadily, I think we're getting to a place where even as news flow out of this Adani Group continues, the incremental impact on the market perhaps is starting to come off a little bit. I'll get to that in a more detailed way. But just those stocks will come up on your screen. And there was pressure once again. Adani Ports, Enterprises, Adani Total, Adani Green, Transmission, all under pressure, varying degrees. The cement names, Ambuja Cement and ACC, both did much better in trade today. A little bit of follow through from yesterday. Insurance as a sector continued to bleed. So HDFC Life and SBI Life were lower. But others, ICICI Pru was up a little bit. It was a little mixed, but more down than up in the insurance pack. Apart from that, losses coming through on the large caps and names like UPL, Divi's Laboratories and Eicher Motors, which gave up some of the gains. FMCG and IT were two pockets which did well. So Lever, Britannia, ITC standing out in FMCG, and of course the large cap tech pack doing pretty well. As I said, we've seen a flat close, a positive on the Nifty, a positive close on the Bank Nifty, and the hope is that even as this, the market kind of works its way through this entire issue on the Adani front, the rest of the market perhaps, moves on a little bit. Will that happen immediately or will it take time is something we need to watch out for. But I think it will happen. The good thing is that we've got a bit of a global tailwind, which we are not reacting to right now. But given what the Fed meeting threw up yesterday, the price action out of the US, it's not looking dire at all. It's actually looking constructive overall. Back to you.
Thank you very much for that. In market opinion, Samir Arora of Helios Capital said that the Indian budget was broadly fine. He added that he was betting big on consumer, IT and the financial sectors.
In the consumer sector, although there was no explicit benefit, but the fact that this is an election year means that a lot of billions of dollars will be spent in the campaigns by 540 into maybe 3 candidates per location. Per constituency into maybe they spend $2 million each or whatever. So the amount of money that will come into the consumer sector will also not be bad. And then there were no negatives. So that itself is a positive. There was fiscal consolidation. There was a bit of this thing on focus on capex. So everything in the budget was broadly fine. We will continue with our same 2 preferences out of our 3 normal preferences, which is IT, consumer, and financials. Right now is mostly financials and consumer.
In more market opinion, Sridhar Shivaram of Enam Holdings said that he was bearish on life insurance companies and will have to look at it as a non-growth area. However, he's bullish on select private and public sector banks. Listen in.
Government had already indicated that they were plugging all loopholes as far as savings products which were tax-free. And I've been very bearish on insurance for a while for exactly this reason, that they don't sell protection. Only 10% of life insurance companies is individual protection. Rest, almost everything is actually some sort of a tax arbitrage product, which is a savings product. I mean, look at 7%, tax-free products for 30, 35 years. You can still buy it. You have another 2 months to buy it. The thing is that the growth aspect of insurance is going to go. So now you'll have to look at them for a while as a non-growth stock. So is it fair to pay 3-4 times embedded value? That's a question that people who hold the stock will have to ask. Top private sector and some of the larger PSU banks. We've been long on the PSU banks for a while. We think that even that looks very attractive given the fact that their credit cost continues to fall. In the private sector, we've already seen credit cost falling substantially. In PSUs, we are scaling. It's a work in progress. So as the credit cost falls, the profitability, as you've seen in the last quarter's numbers, that the profitability of some of the PSU banks have been up almost 50, 60, 70%, predominantly because of credit cost, not on the top lines. I think the only concern I'll add for financials is that currently there is a scramble for deposit.
Okay, let's get to the second headline now. Adani Enterprises has decided to pull the plug on its 20,000 crore rupee follow-on public offer, even though it was fully subscribed. The rare move, never seen before in Indian capital market history, caused panic across the Adani Group's listed entities. In a regulatory filing, the company said it will refund the FPO proceeds to investors, citing market volatility and the fall in its share price as the reason. Adani stocks have been under constant pressure after the American short seller Hindenburg published a report raising several red flags. Ever since the Hindenburg report was released, the Adani Group's market capitalization has eroded by nearly 10 lakh crore rupees. At its peak, the conglomerate's market capitalization was nearly 25 lakh rupees just before the Hindenburg report was published on the 24th of Jan. The market cap is now under 20 lakh rupees. Today, it stands just over 10 lakh rupees. In a rare public appearance, the group's CEO Gautam Adani said the FPO was being withdrawn because it was not morally correct to proceed with it. Adani also added that the FPO withdrawal will not impact existing operations.
Considering the volatility of the market seen yesterday, our board strongly felt that it would not have been morally correct to proceed with the FPO. For me, the interest of my investor is paramount and everything is secondary. This decision will not have any impact on our existing operations as well as our future plans. We will continue to focus on timely executions and delivery of projects. Once the market stabilizes, we will review our capital market strategy.
The Reserve Bank has sought information from banks on their exposure to the Adani Group. Shireen Bhan joins us now. Shireen, what are you picking up?
Hi. Well, yes, what we are given to understand is that the regulator has asked banks for information about the exposure to the Adani Group. Now, remember, this is not as if the Reserve Bank is taking some action. This is what we're given to understand as part of the standard operating protocol, given the fact that there have been significant developments that have taken place with respect to the Adani Group over the last few days. Now, as part of the standard protocol, the RBI is asking regulated entities, i.e. i.e. banks. If there are any fresh developments that the Reserve Bank needs to be aware of that may not have been factored in as far as the central database is concerned, which is CRILIC. Now, CRILIC does get updated weekly as well as monthly. Different data sets are updated weekly or monthly. And because there has been so much volatility in the Adani Group stocks and pledged shares, etc., just as far as abundant caution is concerned, the Reserve Bank has asked banks for any updated information that will clarify on any doubts that may arise. What we are also seeing, which is clear, statements coming in from various banks that do have exposure to the Adani Group. This morning we heard from IDFC Bank saying that there is no concern that the bank has. We heard similarly from State Bank of India. So individual banks also coming out and issuing statements on their exposure to the Adani Group as well as where things currently stand. So this is the RBI seeking updated information from banks as part of the standard operating protocol, given the sharp volatility that we have seen in the last few days.
Thank you very much for that. Brokerage house Bernstein has also conducted an analysis of the share pledge situation of the Adani Group companies. Nimesh is at the big wall with the details.
After Adani Enterprise withdrawing the 20,000 crore fallen offer, which was fully subscribed, all eyes will be now on the Adani's bonds, which are trading globally, as well as the promoters' debt position. Now, Bernstein has put out a note today morning analyzing the promoters' pledge share percentage to the promoters' holding across a couple of time zones. So I'll just quickly run through most of the companies where there were large pledge. To start with, I'll talk about Adani Green. If you look at Adani Green, as of March of 2020, the promoter pledge was 13%. That fell to 4% as of December 2022. And after the 2 days of fall or 3 days of fall in the stock price, there is an implied expectation that this pledge will go up to 8% or 9% going forward as far as Adani Green is concerned. The second stock is Adani Power. If you look at Adani Power, Bernstein had the data for March 2020, but as of December 2022, it was at 25%, and that is now expected to inch up to 39% because of the share price falling in the last couple of days. The third stock is Adani Transmission. If you look at Adani Transmission, there has been a sharp dip in the promoter pledge as well. From 54% as of March 20, it has fallen all the way to 7% as of December 2022. And now after the fall in the stock prices, it is implied that this pledge will go up to 11 to 12%. The most important stock to watch is Adani Enterprise, because that's been in the news as well. If you look at Adani Enterprise, the pledge share was quite high at 50% as of March 20. That has fallen to just 3% in December 2022. This is all official data published by the company, and that is now expected to inch up because of the sharp fall in the stock price. Implied is around 5 to 7% it will go up. The next is Adani Port. Even there, if you look at it, the pledge was quite high at 58% as of March 20. That has now fallen to 17% as of December 2022, and now that's expected to inch up because of the sharp fall in the stock price, implied to 32% as well as far as Adani Port is concerned. But there are a couple of stocks in that group which don't have any pledge share, and that includes the names like Adani Gas as well as Adani Wilmar. There is no pledge share. In fact, apart from this, there has been a clarification that the promoters have not pledged any shares of Ambuja Cement as well as ACC. But now that the FPO is out of the way, this is a big talking point in the minds of the investor as well as to how the promoters' pledge will move because of the sharp fall that we've seen in the individual stock prices. Back to you.
Thank you very much for that. Let's get to the third headline for the day. A whole host of FMCG stocks were in focus. Britannia gained 4%, one of the top Nifty gainers after it delivered a strong set in Q3. ITC's share price also rose by 4%, hitting an all-time high, extending the post-budget gains. Meanwhile, Jubilant FoodWorks reported a 40% drop in profits in Q3. The stock was down 4%. Manglam is here with the details.
Well, the FMCG pack indeed was in focus today, with both ITC as well as Britannia hitting record highs, the top gainers on the index as well. And on the way down, we had Jubilant FoodWorks, which was lower too. So let's talk about ITC and Britannia first. ITC has been gaining ever since, the increase in taxes on cigarettes in the budget was lower than what the street feared, but ahead of results tomorrow as well. And the street expects, good results coming in. 8 to 11% growth in cigarette volumes, 18 to 20% growth in their FMCG business. Strong performance coming in from the hospitality business. If Indian Hotels numbers are something to go by, ITC's hospitality business is likely to do extremely well as well. And we do expect some moderation in the paper business growth. And by moderation, it means around 12 to 15% sort of growth expectations that we are, going into the numbers with. For Britannia, the stock at a record high because of strong numbers coming in. Consistent market gains market share gains for the company over the last 39 quarters. And this time around, the operational performance was a standout performance this time. 51% jump in their EBITDA, with margins coming in at 19.5%, a number which is the best that we've seen in the last 10 quarters. In fact, very close to its record high margins as well. As far as Jubilant FoodWorks is concerned, however, that was lower, down over 10% in the last 2 trading sessions because the numbers were poor. Gross margins declined by about 540 basis points year on year. Domino's like-for-like growth was just 0.3% versus expectations of 4 to 6% growth. And remember, this was a seasonally strong quarter for them, with both the Cricket 2020 World Cup and the Football World Cup being there as well. But it's interesting that over the last 12 months, pizza versus burger has been a big theme that's played out. Westlife Development, or Westlife Food World now, actually has seen a 40% rise in their share prices over the last 12 months, as against Jubilant FoodWorks, which has seen a decline of 42 to 43 odd percent. So what has happened now is that in terms of valuations, pizza, which traded at a much higher valuation premium to burger, McDonald's that is now trading at a discount at 43 times 2-year forward earnings, as against Westlife, which trades at 58 times. So it'll be interesting to see where it goes from here.
Thank you very much for that. Let's talk about some more earnings. HDFC Limited fell close to 2% after reporting a weak performance in Q3. The problem was the loan growth. Abhishek Kothari joins in with the details. Abhishek.
Well, it was a weak quarter for HDFC Limited, given that the loan growth is really weak and P&L is below the pole. So to begin with, asset quality, the gross NPA ratio is one of the best in last 12 quarters or 3 years. It has come in at 1.49% when compared to about 1.59% in the previous quarter. The restructured book has remained stable on a sequential basis, coming in at 0.7%. The net interest margin has improved by 10 basis points quarter on quarter to 3.5% when compared to 3.4% in the previous quarter. Even the spreads have improved. This time it's come in at 2.29% versus 2.28% in the previous quarter. However, AUM growth is on the weaker side, up about 13.3% YOY and about 1.6% sequentially. So quarter on quarter, this 1.6% is perhaps the lowest in last 6 quarters and second lowest in last 22 quarters. YOY, the loan growth of about 13.3% is the lowest in last 4 quarters. PNL marginally below our pole. The NI has come in at 4,840. We were working with a number of 4,864, while the PAT has come in at 3,691 crores. We are working with a number of 3,728 crores. Back to you.
Thank you very much, Abhishek, for all those details. Need to slip into a very short break. We'll be back in a jiffy with the other headlines. Welcome back. You're watching Markets Today, and the fourth headline for the day are the auto names. Now, Ashok Leyland ended up in the green. The stock was up nearly 3% by the close of trade, reacting to a strong set of Q3 numbers and the auto sales. So talking about Ashok Leyland's Q3 numbers, revenues up 63%, margins expanding by 500 basis points on a year-on-year basis to 8.8%, and profit. This time there is a profit versus a loss in the comparable quarter of last year, a PAT of 363 crore. The total sales too have gone up by nearly 23%. On the flip side, Hero MotoCorp, the January auto sales numbers were weak. The total sales were down 6.3% on a year-on-year basis, the third consecutive month that the total sales were below the 4 lakh unit. In the month of January, remember, the sales numbers were 3.56 lakh crore. Eicher Motors has reported a good set of numbers on a year-on-year basis and on a month-on-month basis. So year-on-year, the Royal Enfield sales were up 27%, and month-on-month, the Royal Enfield sales were up 9.2%. But the stock was a bit subdued in trade, ending with a cut of close to about 2.5%. So that's about the auto sales. Now let's get to our fifth headline for the day. And metal prices continue to hit new highs, but the stocks falter on profit booking after the recent run-up. The Nifty Metal Index was down over 1%. JSPL tanked 5.5%. Let me go across to my colleague Manisha for more details. Manisha.
Oh yes, it has been a good day for metals as a sector, where we did see the US Fed move in line with the street expectation with 25 basis points of a rate hike, and then a sharp decline in the dollar index also aided the price increase. Metals in any case have been on a rise because of the China reopening and demand estimates coming in from there, and the global inventories for many of these metals have been on a decline. So you have copper prices coming back to a 7-month highs. Aluminum is trading at an 8-month highs as well. Output cuts and key European smelters factors continues to aid the prices on the higher side. Also, when you look at the copper inventories, they are at 2 days of global consumption. Aluminum inventories are the lowest since 2002. And when you look at the zinc prices, which are trading at a 5-month highs as well, here as well, the global inventories are just about for a day of global consumption. And we still have those shutdowns coming in from various countries like Netherlands, Germany and France. So lower production, weaker inventories and demand expectations growing stronger day by day will keep the prices supportive. Nickel is another one which saw strong gains coming in. It's back above $30,000 a ton. This is because after Indonesia, now Philippines also is looking to put tax on exports. So this is yet again adding premium to those prices.
Thank you very much. Meanwhile, JSPL tanked over 5% after a mixed set of Q3 numbers. Both revenues and profits were lower than what the street was anticipating. Managing Director Bimlender Jha told CNBC-TV18 that the demand has improved and it expects sales volumes to continue at around 2 million tons per quarter.
The demand is good. We are able to pass on these costs to the consumers. So realization has improved for JSP also because we have improved our product mix a bit. And of course, we have had tightening of the costs. So our costs went down quarter on quarter by about 9%, whereas there was a 1% decline in the net sales realizations. So sales volume numbers, I already gave you an indication of what we are currently doing is around 2 million tons of production per quarter.
Okay, moving on. The budget has continued with the government's agenda of plugging the tax arbitrage options used by the ultra-rich. It has proposed taxing payouts received from life insurance policies issued after 1st April 2023 if the total life insurance premium of all policies combined paid in a year exceeds 5 lakh rupees. Yash is standing by with an explainer. Yash.
Well, Rima, if you look at the budget, it spelled out two negatives for the life insurance industry. The first one, as you mentioned, is essentially the intention to tax the income coming out of savings life insurance policies at their maturity. And the second one is with respect to government's intention to sweeten the new income tax regime. I'll first speak about the primary negative. Here what the government has said is that they will be taxing income from large ticket savings life insurance products. Now what is large ticket? It's essentially when an individual's premium, annual premium is more than 5 lakh rupees towards one policy, or if he has more than one policies, then the premium put together. What happens is in a situation where a person buys a life insurance policy starting April 1st, 2023 or multiple life insurance policies, the annual premium which he pays, if it is more than 5 lakh, then the policy with which he breaches that condition or threshold of 5 lakh will be taxed when the policy matures as income tax. I'll give you an example just to understand this thing. Considering an individual has two policies, first one having a premium of 4 lakh and the second one having a premium of 2 lakh, then the policy which has a premium of 2 lakh will be taxed because it is that policy with which he's breached the 5 lakh limit. Just another example, if a person has three policies, one 2 lakh, second 2 lakh and the third one 1 lakh, then he's still under the limit of 5 lakh, so all three policies will be tax exempt. The second negative, as I said, is government's intention to sweeten the new income tax regime. Now, the new income tax regime does not have any exemptions under ATC or any sort of category. Under ATC, of course, life insurance premium gave you some sort of income tax exemption, but if people are shifting to the new regime where there is no exemption, the intention or the interest in buying life insurance policies for income tax savings will reduce, hence reducing the attractiveness from that purpose.
Thank you very much, Yash, for explaining that. With that, it's a wrap on this edition of Markets Today. Thank you for watching.
Co-presented